Hey all, good morning and welcome to ShareTreck. It's the 1st of July 2022. It's Memorial Day holiday here in Canada. And the big question before us today is, are we going to see any greens in the market today? Or is it going to be a sea of red again? So let's answer that question. Let's get started with our daily update. Let's first start off with the headline here, which says Eurozone inflation hits record 8.6% as the European Central Bank prepares for its first rate hike in 11 years. The key point here seems to be that the headline inflation came in at 8.6% year on year for the last month, according to preliminary figures from Europe's Statistics Office Eurostat that was released on Friday. That bet a prediction of 8.4 in the Reuters poll of economists. So against the expectation of 8.4% inflation, they got 8.6. So it's pretty serious indeed. However, subsidies seem to be making a distortion. Germany surprised many earlier this week when it reported a drop of 0.5 percentage points in inflation month on month. That statistics would mean nothing from an analysis point of view, because the experts said this was due to new government subsidies to ease the impact of high energy prices, and it was not yet end of the surging inflation rates. Both France and Spain experienced new inflation records in June, with the latter surpassing the 10% threshold for the first time since 1985, according to Reuters. Further bad news is that recent business activity data suggests that euro area is already losing steam. The overall question is whether the eurozone will manage to escape a recession this year, or if it will get into recession in 2023. So that's the conclusion from this article. And Bloomberg economists forecast a recession in the eurozone in 2023 with a GDP contraction of 0.8%. So all this is thanks to the twin problems. One is the Russia-Ukraine war, and second is the supply chain issue, which is improving a little bit, but it's very complex. So I'm having a separate video coming up shortly on supply chain, so that we can understand better and have a good estimate of when supply chain pressures will ease. So watch out for that video. Here is another news which probably would be welcome for the cryptocurrency market, because that would mean more mainstreaming. So there are key points to this article, which has the heading EU agrees on landmark regulation to clean up the crypto Wild West. The European Commission, lawmakers and member states hammered out an agreement on reforms Thursday. The new law, known as Markets in Crypto Asset (MICA), is the first attempt at creating a comprehensive regulatory framework for digital assets in the region. EU lawmaker Stephen Berger said the rules will put order in the Wild West of crypto assets. So we'll wait for more details on this, but the more regulations we get, the fly-by-night operators will be out of the area. And we can be assured that if any crypto starts developing, it's underpinned by a lot of regulatory oversight. However, people who are looking for anonymity and people who are looking for total decentralization will find this regulation very distressing. And the fact that EU has started off this process would mean that sooner rather than later, we are going to have more similar actions on the US side as well. So that's a bit of a positive for the cryptocurrency, in my personal opinion. Internal Facebook memo warns company must be disciplined and prioritize ruthlessly. This is the next headline that I wanted to talk to you about. And it goes without saying that Facebook has had a lot of trouble. They have tried to maintain a low profile, especially their troubles post-election with the way they had managed their platform. Many people were unhappy. Both the conservatives as well as liberals were unhappy with the whole thing. And as a result of which, Facebook took a lot of flack. And then they have lost their chief. And they also decided to change their name. So they have done a whole lot of different things. And Apple's privacy update also caused a big deal of problem to their data collection and their business model. So overall, I think Facebook will definitely face a lot of pressure due to the tightening monetary situation, and they need to come up with a whole lot of internal efficiencies in order to continue to be the kind of company that they once were. So I agree totally with this particular headline. It's a step in the right direction, and it could possibly result in a bit of a favorable outlook for the company with investors. Here is one more headline that caught my attention. GM, Ford rising, Tesla falling in EV car wars in US. Bank of America analyst says this was published today. Basically, I agree with this. I was anticipating that this is what is likely to happen because Elon Musk has been very, very distracted. He's running many enterprises, and on top of it, the Twitter spat, the whole activity of trying to buy Twitter and then having to arrange for funding, and all those things have distracted him. And also, you should remember that the Chinese lockdown is affecting Elon Musk a lot, because earlier when Tesla stock was rising, that was because Shanghai output is going to have a huge margin. That was the reasoning behind that. So now everything is looking bleak as far as the Chinese production is concerned. And in Europe, we have the oil embargo coming up. So energy requirements are going to be met with more expensive solutions. And therefore, the margins in the German production are also likely to be lesser. And amidst all these things, I hope Elon has better sense to stop being a celebrity and just focus on Tesla and get back into the mode in which he was when he developed Tesla right from scratch. And that's what needs to happen right now. And he has got to get away from all the glamour and all those things that he's getting kind of addicted to. That's my personal opinion. You can put what you think in your in our comments so that we can have a conversation on this. With that said, let's go and have a look at our Nasdaq and indices and see what is happening out there. It's around 7 o'clock in the morning. It's a bit early, but still we will have some trends out there, and let us check it out. And we have already seen that the market is very unpredictable, and all our technical analysis is not going to mean much because anything can change the market. Today, the Canadian markets are closed for Memorial Day, so it's only the US market that's on. And we are coming to the end of the week, so there is going to be options activities going on because there will be a lot of options expiries. And also, I think that people would definitely not like to have risk on the table for the weekend, and probably there will be some amount of selling today. So the chances of being a bear market is much high, but let's go and check it out. Let's start off with the futures. I'm going to look at Nasdaq futures, and we can see that Nasdaq futures is still within the bearish channel that we have drawn out here. And this is today's candle. It's a bearish hammer out here, and we can see that the MACD is tending towards the signal line, whereas the momentum is also weak. Pre-market, we are already down minus 0.28%. So it's not looking great from the Nasdaq futures perspective. But in the past, when we had the futures pointing at negative 0.28, we have gone ahead after market open to get back into the green. Right now, I'll consider this bearish, but it could change at a dime. Now let's go on to look at the indicators. I'm going to start off with US oil first. US oil is has come down yesterday, but this is today's candle. This green candle today is well within yesterday's range. It bounced off this diagonal line of support. So the support is still holding, and it seems that the resistance was not strong enough. So 107.52 has been surpassed. I'm going to convert this into a support. So that's not a good news for us. Oil has been going up again. We can see that the momentum is below average but pointed upwards, and MACD is bearish. So oil could potentially gain a little more until it faces the resistance, which is going to come to it from the 9-day exponential moving average, which is sitting at 109.11. So hopefully that resistance is able to push it back down. But as oil goes up, I would consider that to be bearish for the Nasdaq. Now, if we were to look at the Nasdaq itself, we are still in a bearish channel that we had plotted earlier. Yes, you can see it's been with us for a long time, all the way from around 16th of December. Yesterday's candle was this a doji candle, which was constrained on the top by the 9-day exponential moving average. So it showed a whole lot of indecision, and its bang in the center is the body of the candle out here. The MACD is looking bullish, but it's tending towards the signal line. That's not a good sign. Momentum is also dropping and it's below average, so that's also not a good sign. And pre-market we are down minus 0.56. So it seems like Nasdaq QQQ is also indicating that it's going to be a bearish market. Let's go and have a look at S&P 500. Pre-market it is down minus 0.30%. It's not that great a number to be a negative pre-market. It's around 7:41 a.m. right now. But still it's indicating a bearish open. You can see that there was a doji candle yesterday. It's a green candle, similar to what we had with Nasdaq, but Nasdaq had a red candle, meaning it started up and it came down and it came to the center. And this candle here means it started low, came up, and then came back to the center. So they're qualitatively different. So S&P seems to be much stronger than Nasdaq, and it has got a wider range of companies within it. So overall, the health of the stock market seems pretty decent if we look at it from an S&P point of view, because it's bullish out here. But the market open seems to be bearish. MACD is bullish but tending towards the signal line. Momentum is falling and it's below average, so that's not a good sign. So I would say that S&P 500 is also pointing to a bearish open. If you look at the Russell Index is looking similar to S&P 500 in the sense that started low and then went up and settled somewhere in the middle to form a doji candle for yesterday. And for today, the MACD seems to be bullish but tending towards the signal line, and momentum is below average and falling, and pre-market it's down minus 0.43%. Therefore, I would say that the Russell Index is also pointing to a bearish open. If we look at Dow Jones Industrial Average, I would say that it's again looking similar to what we had with the Russell and the S&P 500. Started low, went up, came down, formed a perfect doji candle out here. It was pushed down by the 9-day exponential moving average, and the MACD is bullish but tending towards the signal line. Momentum is below average and further falling. Our biggest challenge is to break through the 9-day exponential moving average, and then we have a twin challenge of the horizontal resistance at 312.49, which is this red line out here, and also the yellow line, which is a 20-day exponential moving average, which is sitting at 312.77. So those twin resistance are going to be very, very strong to overcome. We have to see what happens further out here in this space. I think overall the sentiment seems to be bearish among all the indices. Let's look at the VIX. This is the candle for today, 1st of July, and we can see that VIX had started higher than yesterday's range and it had come down, and it's getting excellent support from the 9-day exponential moving average. So we have to wait and see if we can break down below that. As long as VIX remains within the same range like what we had yesterday, I would say that it's a wash. It's not indicating whether it's going to go bearish or bullish. It's in the same range, but once it breaks down below this 9-day exponential moving average, I would say that it will be a positive for the market open. But right now I'm going to leave it as it is. It's inconclusive. When we look at put call ratio, we have come down yesterday to 0.944, which is coming slightly into the bullish territory and almost close to neutral. So I would say that put call ratio looked positive when we closed yesterday. We'll have to see what happens when the market opens today and we have option settlement and everything. So that said, I want to quickly look at Japanese yen, because we had an interesting story going on out there. Will they touch 140, and what will Japanese monetary authorities do? Fortunately for them, they have fallen below the line of support that we had here. And that's a good news. That's a welcome news for them. They are at 135.30. They have dropped minus 0.26%. And I suspect that this gives them a bit of relief out there. And with that said, I think I would like to go and have a look at crypto and gold and see what's happening in those markets. So Bitcoin is still struggling to get past 20,233. It's firmly below 20,233, and at one point of time it had fallen all the way down to somewhere around 18,587, and then it jumped up again. I'm of the opinion that it's going to touch 16,000 before it goes up again. With that said, let's look at gold. Gold has fallen below the line of support of 1788, and it's currently at 1786. So I'm going to mark this line as a resistance, and we'll see what happens, because MACD is bearish and moving away from the signal line. Momentum is also dropping. So I'm a bit confused with why gold is doing so poorly when inflation is raging around the place and interest rates are going up. With that said, let's go and have a look at the US dollar index. I think we didn't check out the US dollar index. That could also give us some kind of insight into what's happening. So US dollar index is going up, which is not good for the stock markets. It's being supported by the 9-day exponential moving average, and it's being constrained by this resistance at 12,956, which is an all-time high in the recent past for us, and we have formed a perfect cup and handle pattern. So there's a good chance that we may have a big boost in US dollar index, and when we break above this, and that's going to be really bad for the stocks, in my opinion. So with that said, I think we got to go and have a look at the genomic stocks. So here we have the genomic stocks in our list, and I have sorted them according to the winners from yesterday. So Pfizer, SQZ Technologies, and Vertex did very well yesterday. I was a bit tempted to sell the stocks that I had bought, the SQZ stocks that I had bought. I'd got 700 of them at $3.05, and yesterday I think we touched a peak number of around 3.24. But I have held on to it. I did not sell any calls. At this point of time, I am slightly regretting that decision, because I think I'm going to be trapped in SQZ for a little while if the market falls down. We can already see that Pfizer is down 52.7%, but at the same time, the positive is that ARCG has got a 1 cent gain pre-market, whereas Pfizer has got a loss of minus 0.31% pre-market. So hopefully SQZ Technology manages to stay positive, and I swear I'm going to sell it right now and take my profits and keep the cash handy, because the overall market condition is looking very bearish to me at this point of time. So with that said, if we go to the very bottom, we have Bluebird, which lost 9.61%, but it is still above the line of support. It has seen worse days before. And the MACD is still bullish but tending towards the signal line, but momentum is the one that is causing the problem. Though above average, it is tending downwards, and pre-market we are flat with Bluebird, so we don't know what's going to happen out there. DNA again is positive, 1.68% gained 4 cents pre-market, and it is still above the line of support that we have here, which is at 2.13, which means that it could drop further before it goes up, because MACD is bearish and momentum is also below average. Beam is down minus 4.23%, and it's still struggling against this resistance out here. And today pre-market there are no trades, and the support is at 29.41, so it's likely to come down. MACD is bullish but tending towards the signal line, and momentum is just at average and pointed down, so it's not looking great there. Invite is also having a doji candle formed yesterday, so that was indecision, constrained by the 9-day exponential moving average. We have support at 2.15, currently it's at 2.44, and pre-market it's up 1 cent at 2.45. MACD is bullish but tending towards the signal line. Momentum is not great, so it's likely to lose a little bit. CRISPR Therapeutics is down minus 3.54%, and it has fallen below this diagonal line of support. I'm adjusting it once more because we still have 3.3 touch points out here, so I can adjust it like this and see what's going to happen today. Pre-market it's down minus 0.12%, that is 60.70, and we are exactly on this diagonal line of support today. And I think that based on the MACD and the momentum, that it's going to fall below, and this is going to become a resistance. I won't adjust it beyond 45 degrees angle, because I think 45 is the optimum. So it's now going to form the role of a resistance going forward, in my opinion. Teladoc is down minus 0.33%, well firmly within the previous range of consolidation, and all the MACD and momentum indicate that it's going to fall further. Pre-market it's already down minus 0.33%, and it's standing at 3.10. With that said, let's look at PABC. PABC is PACB is up 0.23% before market. That's around a cent, and it's on top of this minor support which is there. at 4.42. And very slim support out here, but the major support is going to be somewhere around 3.92. MACD is bullish but tending towards the signal line. Momentum is also below average and low. So MACD is going indicates that it's the momentum indicates that PSCB is going to be weak today. That said, let's look at Editas. It's down 3.21% as of yesterday. No pre-market trades. Overall, all the indicators seem to say that it's going to be weak. Yesterday was a doji candle, constrained by the 9-day and the 20-day exponential moving average. So definitely we are facing strong headwinds for Editas. Allogene, supported by the by the 9-day exponential moving average, which stands at 11.34, is supporting it. And pre-market, there are no trades, looking weak on the MACD and the momentum as well. So Allogene might face headwinds today. Caribou Biosciences again is looking pretty weak on the charts. ARCG has got a positive gain of 0.03%. It's sitting at 31.50. Yesterday was a doji candle, again constrained by the 9 and 20-day moving average. MACD and momentum are not looking great. We have support, ultimate support at 29.47. So we are going to be range bound here. Verve. It's down minus 1.42%. Again, it's within our range, but it's getting support from the 9-day and the 20-day exponential moving average. No trades pre-market, but momentum is above average and pointed down. This is what concerns me. If the momentum picks up, we should be fine with Verve. Intelia is down minus 1.28% as of yesterday. Bounced off this line of support. I have to convert that into green. It bounced off the line of support. It had also bounced off the 50-day, 20-day exponential moving average, which is this yellow line and the fluorescent blue line out there. Pre-market, there are no trades, but the momentum, though above average, is pointed downwards. That's what concerns me. But if the momentum changes, then Intelia should do okay. Illumina is down minus 1.11% yesterday. It has fallen below our earlier support lines. I'm going to remove the other support line to clean up the chart. Our first consolidation range was broken down, and we are back down into the next consolidation range, and we seem to be forming some kind of support out here. So I'm going to draw a line of support out here and mark that into green. So this is the channel in which we are oscillating. Right now there are no trades pre-market, but MACD is bullish. Still the momentum is very weak to make any difference. So I think Illumina has got headwinds for today. Regeneron is down 1.09%, and it has formed a doji candle yesterday. I'm going to clean up this chart a little bit tomorrow because there are too many lines in here. I've already cleaned up quite a few charts, but this needs more cleaning up. Momentum is below average and pointed down. So even though MACD is bullish, I don't think it matters much. Pre-market, there are no trades, but we have got good support at 586.97, which is this diagonal green line. That's 587.42. That's where we are going to get our support. So with that said, I think overall the market is looking bearish, at least at the open. If things improve during the day due to option expiry and other things, let us see what happens. But I think it's going to be a bearish open. And because we are at a weekend, I think that people may not want to leave risk on the table. So there would be some selling to take money off the market for the weekend. With that, I would like to end this video, and I hope you like this video. If you like the video, please press a like out there so that YouTube can promote our channel to rest of the YouTube universe. And if you're not yet subscribed, please subscribe and help us grow this channel. We are growing pretty fast, but we need more subscribers. We want to reach the 1,000 mark, and I would encourage you to subscribe. And many of our viewers, more than half of our viewers are not subscribers. So I would urge all of you to subscribe and become a member of this channel. Thanks and have a great day. And I hope you have a great weekend. It's a long weekend here in Canada. So we are going to have a good time. And I'll come up with some special features for you. Watch out for that during the weekend. Bye for now.